So the second topic of this review is all about the ethical standards and responsibilities of professional accountants. This is also a very important topic because we have to always apply this in our professional practice. When you become certified public accountants, let's say next year or this year, God willing, you have to make sure that you apply these ethical standards on a day-to-day basis. You have to learn this by heart. Okay, so what are the five fundamental principles of ethics for professional accountants? They are the following. So remember these five fundamental principles. We have integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. So, what is integrity? What is meant by integrity? Integrity means to be straightforward and honest in all professional and business relationships. So, this is your quality as a professional, okay, as a person. You should have integrity. You should be honest and straightforward. Objectivity means not to compromise professional or business judgments because of bias, conflict of interest, or undue influence of others. Meaning, you should decide on something. You should decide on something because this is the right thing to do, um, not just because this person is your friend, this person is a family. So you should be objective in making decisions. You should be objective. You should follow what is right. Do not let your judgment be uh, tampered with bias, with conflict of interest, or influence of other people. Then another fundamental principles of ethics is our professional competence and due care. This is our responsibility as professional accountants to maintain or attain and maintain. So attain first, and then once you have attained professional knowledge and skill, you should be able to maintain it. So attain, then maintain. Attain and maintain professional knowledge and skill at the level required to ensure that a client or employing organization receives competent professional service based on current technical and professional standards and relevant legislation. So you might know this at this point, since you are already reviewing, you already know that some of the standards that we use in our financial accounting have been changing from time to time. Okay, so when I was in college, we have a particular rule for operating lease and finance lease. When I graduated, another rule was implemented, and then it has been changing from time to time. So what you have learned in the past may not be correct anymore, may not be relevant anymore. So you should make sure that you maintain your professional knowledge and skill. So how can we do this? That's why we have this CPD requirement, right? Continuing professional development, or CPE, continuing professional education. That is why we are required to attend seminars. Even though we are already CPAs, we are required to attend seminars for us to keep abreast of the new rules and regulations affecting our practice. And then we have to act diligently and in accordance with applicable technical and professional standards. Another fundamental principle is confidentiality. This is to respect the confidentiality of information acquired as a result of professional and business relationships. So we have this accountant-client relationship. So for example, if your client has disclosed a particular information to you, you should not tell this, or you should not share this information to other persons. You are only allowed to share this information if your client has consented to it. You should get the consent of your client first before you are to share this particular information to another person. You must respect the confidentiality of the information that is being provided to you by your client. And then the last fundamental principle is professional behavior. This is to comply with relevant laws and regulations and avoid any conduct that the professional accountant knows or should know might discredit the profession. So you should behave in such a manner that um, the profession, the accountancy profession, will not be put to shame. Okay. So do not act like a normal person. You have to act professionally, whether in your business dealings or in your professional dealings. Okay? Because once you make un, an unprofessional behavior, an unprofessional act, this would domino. No, this has a domino effect. This would affect the reputation of the profession. So you have to act professionally. Okay. So what is the nature of these fundamental principles? The nature of the principles are mandatory. They are mandatory. Sure. They are not discretionary. You have no choice whether to apply this or not. This is mandatory. So once you become a certified public accountant, you passed the board exam, you have taken your oath, you are required to follow and observe these five fundamental principles of ethics. They are mandatory in nature. So, a professional accountant shall comply with each of the fundamental principles. There are no exceptions. Now, how do you differentiate the fundamental principles from the conceptual framework for ethics? So these two are different, although they revolve in the same concept of ethics. But when we speak of fundamental principles, these are to establish the standard of behavior expected of a professional accountant. So these are your to-dos. You should do this, okay? While the conceptual framework establishes the approach which an accountant is required to apply to assist in complying with those fundamental principles. So the fundamental principles are your what. The conceptual framework are your how, okay? So what fundamental principles? What should I observe? What are my responsibilities as an accountant, as a professional accountant? Conceptual framework tells you the how. So how can I comply with the fundamental principles? So those methods or approaches on how you can comply with the fundamental principles are laid down in our conceptual framework. Okay, I hope that's clear. Another question. A professional accountant might face a situation in which complying with one fundamental principle conflicts with complying with one or more other fundamental principles. For example, I need to comply with, let's say, integrity or objectivity, but it would run counter to another fundamental principle. So what should I do? What can the professional accountant do? So in such a situation, the accountant might consider consulting on an anonymous basis if necessary with the following. So you need to ask advice. You need to consult with the following. For example, others within the firm or employing organization. So if you are working in an audit firm, you can ask your other audit teammates or your audit partner. Or if you are not in an audit firm, you are in a private organization. For example, you are being hired as an internal accountant. You can ask your manager. You can ask other persons inside your organization. Or you can also ask those charged with governance, your board of directors. You can also ask a professional bodies. For example, uh, you want you would approach or you would send a letter or you would call the board of accountancy. A regulatory body. You can also ask the KRC. right? Or you can ask the Securities and Exchange Commission if this issue is well within their authority. Or you can ask a legal counsel. You can ask a lawyer friend, or if your company has an in-house legal counsel, you can ask the legal counsel for advice. However, such consultations does not relieve the accountant from the responsibility to exercise professional judgment to resolve the conflict, or if necessary and unless prohibited by law or regulation, disassociate from the matter creating the conflict. So after um, after consulting with these persons, in the end, it is really up to you to decide. Okay, you need to exercise professional judgment. If you think that you cannot escape the conflict and you are free to disassociate from the matter, you can disassociate. You can um you can sever the relationship. You can stop the relationship, and if you think that there is a conflict with this, you can transfer this responsibility to uh, another teammate in your organization. So in doing this, you as the professional accountant is encouraged to document the following: the substance of the issue, the details of any discussions, the decisions made, and the rationale for those decisions. Okay, so let's now discuss thoroughly the 5 fundamental principles of ethics for professional accountants. So remember those 5 that we have mentioned a while ago. So integrity. A professional accountant shall comply with the principle of integrity, which requires an accountant to be straightforward and honest in all professional and business relationships. So integrity implies fair dealing and truthfulness. So therefore, you as a professional accountant shall not knowingly be associated with reports, returns, communications, or other information where you believe that the information contains a materially false or misleading statement. So for example, if you know that this report is false, you should not endorse it. You should not place your signature on it. Okay, that's an integrity. Or an information that contains statements or information provided recklessly. So, for example, there is no basis for such computation. So, you will not want to associate your name with that report, with that information. Or omits or obscures required information where such omission or obscurity would be misleading. So, there is an omitted statement. For example, a particular asset has been mortgaged or being used as a collateral for a loan, but you failed to disclose it in the notes to financial statement. So it would appear that the asset is a free asset. No? It has no limit. Okay, so that one is misleading because in truth and in fact, this particular asset has already been mortgaged or being used as a collateral. And this one information that is omitted, this would affect the decision of your other lenders, whether this lender would extend another loan to you or not. Okay, so this would be misleading. If a professional accountant provides a modified report in respect of such a report, return, communication, or other information, the accountant is not in breach of the previous item. So if you have affix your signature on such report, but you made some modifications, then that is not considered a breach. When a professional accountant becomes aware of having been associated with information described in the item before the next preceding item, the accountant shall take steps to be disassociated from that information. So, for example, when you affixed your signature, you really believe that the information on the report is true and accurate. But later on, you found out that it's not accurate. It's not the correct information. But you already affixed your signature. So what should you do? You shall take steps to be disassociated from that information. Okay, next, fundamental principle is your objectivity. So a professional accountant shall comply with the principle of objectivity, which requires an accountant not to compromise professional or business judgment because of bias, conflict of interest, or undue influence of others. So when we speak of objectivity, this requires your decision-making process, no? Your decision-making process as an accountant. So were your judgment clouded or not? No, you should not um, let personal relationship interfere with your judgment as an accountant. So let go of any bias or any conflict of interest, or do not let any person exercise influence over you. So a professional accountant shall not undertake a professional activity if a circumstance or relationship unduly influences the accountant's professional judgment regarding that activity. So for example, you are an external auditor. Now you are in the process of auditing the financial statements of a particular company. And let's just say that particular company, the owner of that particular company is your boyfriend. Okay, it's your boyfriend. Now, you during the conduct of the audit, you found out that there are lots of statements and fraudulent activities going on inside the company. But because the owner of the company is your boyfriend, you issued an unqualified opinion. So what does it mean when we issue an unqualified opinion? It means that the financial statements are free from material misstatements, no, due to fraud or error. But that is not actually true because you found a lot of discrepancies, but um, you just made an unqualified opinion because the owner of the company is your boyfriend. So that violates not only objectivity but also integrity, right? So you breached both objectivity and integrity. Next fundamental principle is your professional competence and due care. So we have discussed this already, right? You have to attain, and once you have attained, you should be able to maintain professional knowledge and skill. And you have to act diligently in accordance with the applicable technical and professional standards. Serving clients and employing organizations with professional competence requires the exercise of sound judgment in applying professional knowledge and skill when undertaking professional activities. So, yes, let's say yes, you have a CPA license. Yes, you have maintained your professional knowledge by attending seminars, but you recklessly applied those standards in your business activities or in your professional activities. You are reckless. You acted recklessly. Although you know you have the necessary knowledge and skill, but you applied them recklessly. So not just professional competence, but also we have to exercise due care. Okay. Maintaining professional competence requires a continuing awareness and an understanding of relevant technical, professional, and business developments. So the continuing professional development enables a professional accountant to develop and maintain the capabilities to perform competently within the professional environment. So if you do not know this yet, if you become an accountant, you have to obtain 120 CPD units. So continuing professional development units. 120 CPD units. That means you have to attend several seminars. And you need to comply with a 120 requirement within a period of 3 years. Okay, because this is required for you to renew your license. So without your CPD, 120 CPD, you cannot renew your license. But currently, the PRC is actually lenient pa on this one. So for example, if you were not able to comply with the 120 requirement, they will just ask you to sign an undertaking. An undertaking, it's like a promise that you would comply with the 120 requirements. Diligence encompasses the responsibility to act in accordance with the requirements of an assignment carefully, thoroughly, and on a timely basis. So it's like you being a diligent student. You have to comply with the requirements of your assignment carefully, thoroughly, and on a timely basis. In complying with the principle of professional competence and due care, a professional accountant shall take reasonable steps to ensure that those working in a professional capacity under the accountant's authority have appropriate training and supervision. So, what does this mean? This means that this fundamental principle not only applies to you personally, but you also have to make sure that if you are handling a team, the members of your team have appropriate should have appropriate training and supervision because the quality of their work will ultimately affect the quality of the output of the entire team. Okay, so if you yourself is professionally competent but the members of your team are not, then it will defeat the purpose. Okay, so you have to make sure that your team members, now those under you, also have appropriate training. Where appropriate, a professional accountant shall make clients, the employing organization, or other users of the accountant's professional services or activities aware of the limitations inherent in the services or activities. So you should not guarantee 100% to your clients or to the users of your reports. You would not say this is 100% perfect. No, because you have to inform them, but rather you have to inform them that there are certain limitations. Like, for example, when you issue your audit opinion after you have audited a financial statement. Diba? In our course of our audit, we use sampling. It is impossible for us to examine 100% of the transactions. We just use sampling. And based on the samples that we have obtained, we will issue an opinion on that. Okay, so that is one of the limitations of our service or activity. We should inform the users of our audit reports of such limitation. We should not make any guarantees or any representations as to the perfect quality of our work. There are inherent limitations, so these limitations should be communicated to your client and to the other users of your report so that they would know what what limitations were there so that these limitations could be taken into account in deciphering, in not deciphering, in studying the report. Okay, they would know what are the limitations. Then another fundamental principle is confidentiality. So, a professional accountant shall comply with the principle of confidentiality, which requires you as an accountant to respect the confidentiality of information acquired as a result of professional and business relationships. So, an accountant shall be alert to the possibility of inadvertent disclosure, including a social environment, and particularly to a close business associate or an immediate or a close family member. So, if you have acquired a confidential information from the client because of your communication with the client, you have to make sure that you should not inadvertently disclose it, even though you have no intention of sharing it, but maybe because of the social event, there is a risk that you will inadvertently disclose this confidential information. So you should be alert, okay? Maintain confidentiality of information within the firm or employing organization. So if you are the one that received the confidential information, you are also prohibited to share it with someone, even though that someone is also part of the audit firm. So, for example, audit team number one, audit team number two, all information that are confidential acquired by audit team number one should not be shared to audit team number two. Okay? Maintain confidentiality of information disclosed by a prospective client or employing organization. So, prospective client, for example, we have the initial meeting. That person is not yet your client. You have an initial meeting pa. Then, during your meeting, the prospective client discloses confidential information to you. And then later on, let's say the next day, the prospective client decides not to pursue with your contract. No, let's say the client says, I found another accountant that is willing to charge lesser fees. So I'll go with that accountant. So even though you didn't close your engagement contract with that client, the confidential information that has been disclosed to you by such client should still be should still remain confidential. So even though the client did not push through with your contract, the confidential information that you have received from such client should be maintained confidential, should not be disclosed to someone else. You should not disclose confidential information as a result of professional and business relationships outside the firm or employee organization without proper and specific authority unless there is a legal or professional duty or right to disclose. So as a rule, as long as you have received such information in a professional capacity, you have the obligation to keep it confidential. But there is an exception. If there is a legal right or duty, yes, to disclose it, you can disclose it without asking for the consent of the client. So, for example, the client told you that they have been evading taxes. Okay, so evasion of tax is a criminal act. So that is confidential information, but you are allowed to disclose it because you are under a legal duty. You have a legal duty or obligation to report it to the authorities. Okay. You have the obligation to not use the confidential information acquired for your personal advantage or for the advantage of a third party. Not use or disclose any confidential information, either acquired or received as a result of a professional or business relationship after the relationship has ended. So, for example, let's say after one audit season, your client decides not to continue with you anymore. The client found another auditor for the next period. So, any confidential information that you have acquired during your relationship will still remain confidential despite the fact that the relationship has already ended. Take reasonable steps to ensure that the personnel under your control, as the accountant, and individuals from whom advice and assistance are obtained respect the accountant's duty of confidentiality. Confidentiality serves the public interest because it facilitates the free flow of information from the professional accountant's client or employing organization to the accountant in the knowledge that the information will not be disclosed to a third party. So this obligation of confidentiality puts confidence on the part of the client. The client could be confident that any information that he will divulge to you, you will not share it to other persons. So because of this confidence, the client will be encouraged to disclose more information to you so that this information can be used in the proper provision of your services. Nevertheless, the following are circumstances where professional accountants are or might be required to disclose confidential information or when such disclosure might be appropriate. Okay, so there are instances, although confidentiality is the general rule, there are certain exceptions. The exceptions tell you when you can disclose, when you are allowed to disclose the confidential information. So, for example, the disclosure is required by law in the following instances: when there is production of documents or other provision of evidence in the course of legal proceedings. So, for example, you received a subpoena from the court stating that you are required to show these particular documents to the court during trial. So you cannot say, "Oh, this is confidential information," because the court says that you are required to do so because of the subpoena. Because otherwise, if you If you will not follow the subpoena, if you will not follow the order of the court, you can be cited in contempt. And once you are cited in contempt, the court could imprison you. Okay. So you are required to disclose it. Or there is disclosure to the appropriate public authorities of infringements of the law that come to light. So like what I said a while ago, you discovered that your client is a tax evader. You can report this fact to the PIR. When disclosure is permitted by law and is authorized by the client or the employing organization. So um, if you have obtained the consent of the client, for example, if the client is applying for a bank loan and as one of the requirements for the loan, the certain financial information should be given to the bank, then you can disclose the information to the bank. Or when there is a professional duty or right to disclose when not prohibited by law to comply with a quality review of a professional body. So for example, the Board of Accountancy or the Professional Regulation Commission requires you to submit reports. So these reports could include confidential information that you have obtained from your client. This is allowed, okay? To respond to an inquiry or investigation by a professional or regulatory body. So if you have received subpoena or orders or related to a particular investigation, you can disclose it. To protect the professional interests of a professional accountant in legal proceedings. So for example, you are being sued by your client or by someone else, and then to prove the fact of you not guilty of the offense, you can disclose the confidential information. To comply with technical and professional standards, including ethics requirements. In deciding whether to disclose confidential information, factors to consider depending on the circumstances include. So if you are in a situation whether if you are in a situation in which you want to decide whether you can disclose this particular confidential information or not, here are the factors that you can consider. First, whether the interests of any parties, including third parties whose interest might be affected, could be harmed if the client or employing organization consents to the disclosure of information by the professional accountant. So in short, you have to consider whether there are other persons that could be affected, negatively affected. Whether all the relevant information is known and substantiated to the extent practicable. So factors affecting the decision to disclose include unsubstantiated facts. So if you think that these facts are unsubstantiated, you may not want to disclose it, okay? Because that information is not reliable, incomplete, or there are unsubstantiated conclusions. You can also consider the proposed type of communication and to whom it is addressed, who is the recipient of the information. If that person is an authority, then you might say, yes, you can disclose this. But if the addressee or the recipient of the information has no authority to ask for such information, then you might want to decline. And whether the parties to whom the communication is addressed are appropriate recipients. A professional accountant shall continue to comply with the principle of confidentiality even after the end of the relationship. Take note of this, okay? The severance of the relationship does not mean that you are now allowed to disclose the confidential information. It continues even after the death of the relationship. When changing employment or acquiring a new client, the accountant is entitled to use prior experience but shall not use or disclose any confidential information acquired or received as a result of the professional or business relationship. This means that whatever you have learned from the confidential information that you have obtained from the previous client, you can use that learning, but you cannot disclose the particular confidential information. Okay, another fundamental principle is your professional behavior. A professional accountant shall comply with the principle of professional behavior, which requires an accountant to comply with relevant laws and regulations and avoid any conduct that the accountant knows or should know might discredit the profession. So, for example, do not engage in illicit affairs. So, if you become a mistress and you get caught, that fact will be reported in the newspaper, and in the newspaper, the reporter will describe you as Miss blah blah blah, an accountant caught cheating, something like that. So that would discredit the profession. Or a professional accountant issues a bouncing check. You are a CPA, but you issued a check that has no sufficient funds. That would discredit the profession. Okay. Or you get wasted in a bar. Then someone took a picture of you. Then that would also discredit the profession. A professional accountant shall not knowingly engage in any business, occupation, or activity that impairs or might impair the integrity, objectivity, or good reputation of the profession. As a result, would be incompatible with the fundamental principles. So I hope that's clear. Conduct that might discredit the profession includes conduct that a reasonable and informed third party would be likely to conclude adversely affects the good reputation of the profession, like what I said a while ago. If you get wasted in a bar and um, someone took a picture of you and it spread all over the internet, then that would discredit the profession because they would tag you as an accountant. No, this one, she is a CPA, but she's behaving this way. So it would discredit the profession. When undertaking marketing or promotional activities, a professional accountant shall not bring the profession into disrepute. So there are also rules in marketing your services. So for example, you have an accounting firm and you want to market your services, you have to make sure that the marketing paraphernalia are also professional in nature. So for example, you cannot take a video of you, record a video of you dancing, for example, dancing, twerking, and then place a mark there that for accounting services, contact this number, and so on. So that would put the profession into disrepute. Also, do not lie in your marketing, right? Professional accountants shall be honest and truthful and shall not make exaggerated claims for the services offered by or the qualifications or experience of the accountant. So, for example, if you are a new CPA, you are not allowed to put in your marketing no, that you have experience, you have a thorough experience in tax, in audit, and so on. So, do not exaggerate your qualifications or disparaging references or unsubstantiated comparisons to the work of others. So they're not saying, this one, I do this way, compared to the accounting firm of blah, 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 blah. So do not harm others. Okay, do not uh, tamper the good name of other professionals. If a professional accountant is in doubt about whether a form of advertising or marketing is appropriate, the accountant is encouraged to consult with a relevant professional body. So if you are not sure whether this particular type of marketing is allowed or not, you can ask the BOA or Board of Accountants for an opinion. Okay? Better safe than sorry. Okay. So let's now move on to the conceptual framework. So I'm sure you have a good understanding now of the 5 fundamental principles of ethics for professional accountants. So again, I've mentioned a while ago that the fundamental principles are your what. What are your obligations? What should you do? Then the conceptual framework shows you the how you can comply with those fundamental principles. So the purpose of the conceptual framework is to assist accountants in complying with the fundamental principles and meeting the responsibility to act in the public interest. So for example, in the future, if you are faced with a difficult situation that would compromise your integrity as an accountant or your objectivity, you can always go back to the conceptual framework because this will give you or this will serve as a guide for you. What steps can you follow? Okay. The professional framework provides an approach for for a professional accountant to identify threats to compliance with the fundamental principles. Then, after you identify that there are threats to compliance, you can evaluate the threats that you have identified. And after evaluating the threats, you can now address the threats. So, how can you address threats? Either by eliminating, totally eliminate it, or if you cannot eliminate the threat, you are to reduce them at an acceptable level. So step one is to identify threats to compliance with the fundamental principles. So what are these threats? So threats to compliance with the fundamental principles fall into one or more of the following categories. So first we have the self-interest threat. So this is the threat that a financial or other interest will inappropriately influence a professional accountant's judgment or behavior. So for example, you are personally financially interested in that particular venture of your client. So that might pose a self-interest threat. Then we have the self-review threat. This is the threat that the professional accountant will not appropriately evaluate the results of a previous judgment made or an activity performed by the accountant or by another individual within the accountant's firm or employing organization on which the accountant will rely when forming a judgment as part of performing a current activity. So for example, you are the accountant that prepared the financial statements. Then you are also the one auditing the financial statement. So that is self-review threat because sometimes we have this bias. No, we have this inherent bias that if we are the one who made this report, we would say that this report is correct. No? So if you are the one auditing your own work, you have this bias. You might not be able to discover errors because you are the one making the report in first place. So that is a self-review threat. That is very basic. No, if you are the one preparing the report, you are not allowed to audit the report. Next, we have advocacy threat. The threat that a professional accountant will promote a client's or employing organization's position to the point that the accountant's objectivity is compromised. So, for example, you have a heart for the environment, and then let's say that this audit client is into uh, the protection of the environment, but you found out that they haven't been following the standards for the let's say for the recording of particular assets or for the disclosure of particular liabilities. So you would say, it's okay. I will just, I will just, I will just issue an unqualified opinion because you are now promoting the interest of your client, which should not be so. Because you have to be independent from your client. You should not advocate the client. Okay? You should not become an advocate of the client because that will pose an advocacy threat. Then familiarity threat, the threat that due to a long or close relationship with a client or employee organization, a professional accountant will be too sympathetic to their interest or too accepting of their work. So for example, you have been auditing this client for 3 years already. So every year, the client will go to you for audit. So you have already established a close relationship with the client. Let's say every audit season, that client will give you or will send foods or snacks to your firm. So that would establish a close relationship with the client. So what should you do? Okay, because you already know there is a familiarity threat. So that's why we have this so-called rotation. Okay, so after a few years of handling this client, you will then forward this. You have to reassign this to another auditor. And that is familiarity threat. Okay, that is because of the familiarity. Then intimidation threat, the threat that a professional accountant will be deterred from acting objectively because of actual or perceived pressures, including attempts to exercise undue influence over the accountant. So for example, this particular client is your major client. When I say major, let's say most of your income came from that client. And then the client said that if you will not issue me an unqualified opinion, I will look for another auditor. So that is intimidation in the sense that you might lose a huge client if you will not um, if you will not issue an unqualified opinion, if you will not do what the client wants. So there is an intimidation threat. So note that a circumstance might create more than one threat. The threat might affect compliance with more than one fundamental principle. So the ratio is not always 1:1. If there is a particular situation, it might create several threats. Then just one threat might affect several compliance with the fundamental principles. So for example, if you have familiarity threat, it might uh, it might affect your compliance with the fundamental principle on integrity and objectivity, and let's say professional behavior. Okay, so there could be several breach because of just one threat. Then after identifying, what comes next? Step 2 is to evaluate the threats that you have identified. When the professional accountant identifies a threat to compliance with the fundamental principles, the accountant shall evaluate whether such a threat is at an acceptable level. So evaluate the intensity of the threat. So when can we say that yes, there is a threat, but it's acceptable? So an acceptable level is a level at which a professional accountant, using the reasonable and informed third-party test, would likely conclude that the accountant complies with the fundamental principles. You would say that even though there is this threat, but it's not the gravity of the threat is not so much so as to affect my professional behavior or so as to affect my compliance with the fundamental principles. So it doesn't have to be always zero threats. So there could be threats, but when you evaluate the threat, it's just minor. So it's at an acceptable level. So what are the factors relevant in evaluating the level of threats? So how can you assess the gravity of the threat? The consideration of qualitative as well as quantitative factors is relevant in the professional accountant's evaluation of threats, as is the combined effect of multiple threats if applicable. So examples of such conditions, policies, and procedures that are relevant in evaluating the level of threats include: what are your corporate governance requirements? What are your educational training and experience requirements for the profession? Do you have effective compliance systems that will enable you and the general public to draw attention to an unethical behavior? An explicitly stated duty to report breaches of ethics requirements, and then professional or regulatory monitoring and disciplinary issues. Okay, so once you have evaluated the gravity of the threat, you now want to address the threat either by eliminating or reducing them to an acceptable level. So for example, after evaluating the threat, you found out that the threat is not yet at an acceptable level because the threat is so grave. The intensity is so much. So what you would want to do is either to eliminate na lang the threat or to reduce them to an acceptable level. So depending on the facts and circumstances, a threat might be addressed by eliminating the circumstance creating the threat. So eliminate meaning erase it, disassociate from it. However, there are some situations in which threats can only be addressed by declining or ending the specific professional activity. This is because the circumstances that created the threats cannot be eliminated and the safeguards are not capable of being applied to reduce the threat to an acceptable level. So what do we mean by safeguards? The safeguards are the actions, whether individually or in combination with others, that you as the professional accountant takes that would effectively reduce the threats to compliance with the fundamental principles to an acceptable level. So if this is your acceptable level and the current level of your threats is this much, you want to apply safeguards. So once you apply the safeguards, you will now be able to reduce the threats to an acceptable level. But there are other threats that of despite the fact that you have applied safeguards, the threat has not been eliminated. The threat has not been reduced to an acceptable level. So what you would do now is to eliminate it. Uh, if you can eliminate it without stopping the relationship, or if you cannot eliminate it without stopping the relationship, then stop the relationship or sever the relationship. Okay. So what is required of the professional accountant when applying the conceptual framework? So you should exercise professional judgment, remain alert for new information and to changes in facts and circumstances, and use the reasonable and informed third party test. So what is this exercise of professional judgment? Professional judgment involves the application of relevant training, professional knowledge, skill, and experience commensurate with the facts and circumstances, including the nature and scope of the professional activities and the interests and relationships involved. So this is you looking at the facts and circumstances, then you apply all your knowledge and skill regarding such particular fact or circumstance, and then decide on that matter. In relation to undertaking professional activities, the exercise of professional judgment is required when the professional accountant applies the conceptual framework in order to make informed decisions about the courses of actions available and to determine whether such decisions are appropriate in the circumstances. So again, the conceptual framework tells you the how, right? How you can comply with your fundamental principles. Now, there are lists of actions that you can take. Among those actions, you have to choose which one suits you best for that particular circumstance. And how can you choose what is best? By exercising your own professional judgment. So what is the prerequisite to the proper application of the conceptual framework? There must be an understanding of known facts and circumstances. So you cannot apply the conceptual framework if you do not really understand fully the current circumstance. So that's the very first step and the most crucial step. So what should the professional accountant consider in exercising professional judgment to obtain understanding of the known facts and circumstances? So the professional accountant should look at the following. Whether there is a reason to be concerned that potentially relevant information might be missing from the facts and circumstances known to the accountant. Think whether you have the complete information. If not, then obtain more information. If there is a inconsistency between the known facts and circumstances and the accountant's expectations, if or whether the accountant's expertise and experience are sufficient to reach a conclusion, whether there is a need to consult with others with relevant expertise or experience, whether the information provides a reasonable basis on which to reach a conclusion, whether the accountant's own preconception or bias might be affecting the accountant's exercise of professional judgment, and whether there might be other reasonable conclusions that could be reached from the available information. So you have to take your time in deciding. Okay? Get all the information, assess yourself whether you have the necessary experience and skills to decide on the matter. If you do not have the necessary qualifications, then decide on whether it is appropriate to ask for some advice or consultation with someone else. So we have been repeating this no, reasonable and informed third-party test. Back here, I have mentioned this as one of the requirements before you can apply the conceptual framework is what? the use of the reasonable and informed third-party test. So what is this test all about? Okay, the reasonable and informed third-party test is a consideration by the professional accountant about whether the same conclusions would likely be reached by another party. So for example, you already have a conclusion on a particular fact or circumstance. And then you would ask whether the same conclusion will be reached by another person. If someone else would look at the same facts and circumstances, will the conclusion of that third person, of that other person, be the same with that of your own conclusion? So that is reasonable and informed third party test. Such consideration is made from the perspective of a reasonable and informed third party who weighs all the relevant facts and circumstances that you know or could reasonably be expected to know at the time the conclusions are made. So this reasonable and informed third party does not need to be an accountant, but it that third party must be someone that possesses the relevant knowledge and experience to understand and evaluate the appropriateness of your conclusion in an impartial manner. Okay, so let's now apply the conceptual framework to the professional accountants in public practice. So this application will be dealt with or discussed in the next part of this discussion.